Hey people, it's your man Brandon coming to you live and direct from Woodbridge Mini Court Studios. Normally I am in my office studio, but actually a lot of times I'm here in my office. So I hope that you and your families are well during this time. So I had a conversation this morning with an underwriter at a bank um, that goes over loans. Now, basically, in case you don't know what an underwriter is, it's the individual who looks over all of the documentation and all the information when you are turning in a loan. And they're the ones who validate and approve, like formally approve all of that information. Underwriters are extremely important in our industry. They're, in fact, linchpins in our industry. So the reason why I want to share with you a little bit about this conversation, not the specifics, but what I think would really be very helpful for anyone out there, whether you're in real estate or not in real estate, is this. So one of the things that we do here at Visionary Lending is if you have if you're a realtor and you have a client who is looking to go purchase a home at some point in the future, or if you're a client that's referred to us and you're looking to purchase a home at some point in the future, we oftentimes can do what's called a TBD underwrite, which basically the property is to be determined. Okay. What the advantage of that is that we will take a preliminary look at all of your income documents, your credit, your assets statement, just your overall purchasing landscape. We will look at it. We will package it up very briefly and succinctly, and we will send it into a bank for an underwriter to also review. Okay. But the good news is that there's no property involved. So there's no pressure or there are no timelines involved. The property is to be determined. The big advantage there is that in case there are any issues or any problems or things that have been unforeseen, we can catch them early on, address them, so that once you're under contract and once you're actually in the process of purchasing a home, there are minimal to no worries whatsoever. And that's the big thing. Now, what the distinguishing factor is this. If you're out there working with any loan officer at any bank or any company, my encouragement and challenge to you is this. Make sure that that loan officer, he or she, and their team are doing their proper due diligence ahead of time, not like hours and hours of work before you even purchased a home. I don't mean that. But proper due diligence is getting the right documentation from you so that when a loan is sent into an underwriter, they have as much information to go off of so that they can make a very thorough review and give you a very solid decision on what direction that loan would definitely head in. That could mean making sure that you have W-2s, not taxes, but W-2s, or taxes if you are self-employed, right? You have most recent pay stubs, okay? Verifications of employment, which basically means the lender would verify your actual employment and any kind of breakdowns. Bank statements, if you're purchasing a home, where's your money coming from to purchase that particular property? Down payment, closing fees, etc. If it's a 401k, if it's a thrift savings plan, if it's somewhere else, or if it's a gift, making sure that whoever you're working with has all of this information so that there are no gaps, there are no major gaps, that are left there. This is what we do. This is what we are continually improving upon here at Visionary Lending. I had a conversation with Jennifer Thomas this morning of the Giovanna Homes Group. And one of the things that she had mentioned, as I already know, but it was just kind of reinforced, is that when someone's under contract, of course, there's a lot of moving parts and a lot of things going on, but we talked about the seller side. And basically, it's very important for us to meet those contract dates to the very best of our ability, because we don't know what the seller's situation is. Right? We don't know if the seller has to move out of it at a certain point. Are they purchasing another home? Do they need those funds, right, from the sale of that home going towards something else? Like, we don't know if their house is full of boxes and they got a big moving truck coming. We don't know. Okay. The bottom line is that it's not necessarily even our job to know and be judgmental. about it. Our job is to meet or exceed, right? The expectation, meet or beat the closing date at the end of the day. That's what we're supposed to be doing so that we can provide fantastic, excellent customer service across the board and build that relationship, build that brand, build that reputation. There are times with a lot of lenders where that is not the case, where the closing might get delayed for various reasons. And the most important thing to do in that case, coming from a lender's perspective, from a mortgage broker's perspective, is to take full ownership, is to channel your inner Jocko Willink and have extreme ownership. Okay. To take responsibility and to not point fingers. I think that's extremely important. And that's one of the things that we do here. We strive to be very mature and very responsible, very professional in what we do, and to not point fingers, but to take responsibility in those rare cases when that does happen, because we are human beings, okay? And that does happen. But at the end of the day, I have found that God has blessed us because of our relationships, because we provide such close knit customer service, because we give fantastic, sometimes almost unbeatable interest rates, because 99% of the time we are meeting or exceeding our the expectations with regards to closing dates, because we care about people, because we connect with people. That's why our business continues to thrive and continues to grow. And we're very grateful for that. Okay. And this is why we put this out there, because it's all about the service, right? It's not about propping up ourselves. It's about the service, and the service to those families who are looking to purchase a home. And of course, being respectful of the situation for individuals who are selling their homes. So I hope really that makes sense. Okay. Because our job is to make your job easy. Our job is to minimize the amount of stress that you have. And if you do have stress, right, then our job is to communicate with you in any form possible to address that and to make sure that your questions are answered and that your needs are met. We're human beings here again. And I'm saying this because I'm not going to sit here and just tell you, kind of like with social media. With social media, you get like snippets of like people smiling and they're here and they're there in these videos, and they give you like the very best shots of where they are, and you think that this is the part of their life. No, 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 no. Like, it's a false representation, if you really want to be honest about it, about what's going on with a lot of people. We give you the real representation of what's going on during the loan process, because it's that 30 days or less that we're with you hand in hand. We're your running mates, neck and neck, to help you to reach your goals and objectives. And so it's we don't sugarcoat anything. We want to make sure that we treat you like adults and professionals, and that you get all the proper information that you need so that you can move forward and complete, whether it's your home purchase or your home refinance. In previous just kind of Facebook lives, I have talked a little bit about what's going on in the current market. And again, we are still neck deep, in a seller's market where sellers have all the leverage. They have all the leverage. And so essentially, what's going on is, as a result, that is hindering a lot of first-time buyers who may either be using down payment assistance or who have a minimal amount of money to put down. Now, they may offer a very competitive offer, which is the list price. So if someone's selling their home for $475,000, and that's the list price, and you have a first-time buyer that offers the list price, then hey, that's my buddy Phoenix there in the background. If they offer the list price in a normal market, that's going to be competitive. But in this market, in the DMV market, by and large, people are offering far more. And if you check back a couple of Facebook Lives that I've done, I talked about the intrinsic value versus the market value. Okay. I encourage you to look that up, because those are very important terms to understand, especially with this market. And I was listening to a podcast just the other week, And, they were talking about last year when the CARES Act came out and people were able to put their homes in forbearance, right? And I really find this point to be true. I'm not going to judge everyone, but I could probably say with confidence, just from knowing certain families and individuals, a lot of people who put their home in forbearance did not need to put their home in forbearance. And a forbearance basically means that the mortgage servicer, the mortgage bank says, look, you don't have to make your mortgage payment. Okay. We are going to allow you, for various reasons, not to make a payment for a certain period of time. And we're not going to report you as being behind or negative or derogatory on your credit report. Okay. So kind of think about that. For individuals who really needed that, that is a godsend. It's a blessing because, your mortgage is oftentimes your biggest expense. But for individuals who were working normal, money kept coming in, etc., they said, oh, that's free money. I don't have to spend money on my mortgage every month, right? Let me remind you, let me be crystal clear. It is not free. I don't know who told you it was free. I don't know where you read that it was free. I don't know if you had some kind of, apparition show up. It's not free. Okay. Remember, banks do not do things for free. They are not nonprofit institutions. Basically, what happens is this: if your home was in a forbearance for a certain period of time, the amount of principal that you did not pay or cover, that principal and interest, got added on to the back of your loan. So it is due at some point. Okay. So when you either refinance or you sell, you're going to see that cumulative amount that you did not pay for whatever that period of time is. You're going to owe it. Okay. That's a lock. It's a bottom line. You're going to owe it. But what I'm finding is that a lot of people during that time just save that money. Okay, well, fine. And maybe they've decided to now sell and they're taking all of that extra money that they did not use to pay their mortgages in 2020. And now they are grossly overpaying because they have that additional discretionary money. They're overpaying for homes, right? Prince William County, Loudoun County, Arlington, Alexandria, DC, Prince George's County, Howard County, wherever, right? So someone's putting their house on the market for $650 because that is the intrinsic value. Okay, that's what it's worth. But the market value says, no. The market says, no, you know what? We're going to have 14 offers on that. The lowest offer is going to be $650. The highest offer might be $700,000. So people are willing to pay that additional $50,000 out of pocket. Okay, even though the house actually does not have a real paper worth there. So that's what the market is now dictating. And it'll be interesting to see what the consequences of that will be in the coming months for sure. Okay. So with people doing that, circling back to what I talked about a few minutes ago, that is heavily damaging and heavily detrimental to first-time buyers who just don't have that discretionary money. They have enough money for their down payment and closing fees, but they cannot compete. Okay, they cannot compete with all these people who are just willy-nilly willing to spend that much more extra money, okay, for a home. So I honestly think that if we were to have this discussion at this point next year, at some point, once the market normalizes, I'd be very interested to see if there's any surveys or what kind of happens to the market. Nothing may happen at all, right? But I do believe with the number of people, the hundreds of thousands of people that are paying tens of thousands of dollars above what the actual intrinsic value or the appraisal value of the home is, they're going to be underwater. They're going to owe more than what the house is worth. And so now they're going to have to catch up. Right. So that's my opinion on it. That's my observation of being in the mortgage business, looking at the market every single day, reading articles, talking to real estate professionals. I have a whiteboard right here. Well, actually, it's like right here, technically, that, has multiple people who are very well qualified, who've been looking for homes since March. And they've been outbid. anywhere. And these are people from up in Baltimore on down, well past Fredericksburg. Okay. But you know what we're going to do here at Visionary Lending? We're going to persevere with our clients. We're going to hang in there. Some of them we have to be determined underwrites, as we talked about in the beginning, because it makes the pre-approval letter very, very strong versus other pre-approval letters. Okay. We provide encouragement, constant communication and contact. We're doing everything that we can to help our clients, to educate them, to encourage them, and everything. And in fact, if you see one of the messages, someone who even works at Visionary Lending, he was looking to buy a property up in Baltimore himself, right? And got outbid by a client that we just brought in. So there you have it. That's what kind of happens, right? The wagon train comes on around. But again, it's an amazing, wonderful industry, and we are blessed to be in it. So I just wanted to kind of share a few thoughts for a few minutes. Hopefully this brings value to everyone. I hope that you and your families are safe. God bless, and look forward to just kind of sharing more of my insights, sharing more of my experience on what's going on in the mortgage and finance industry, very, very soon. Take care.